Hello, my conscious money creators. In this video, I'm going to share with you one of the best kept secrets of the wealthy. Are you ready for it? Drum roll, please. Life insurance. What? Life insurance? You're probably thinking, what is she talking about? I'm not dying. I'm not leaving money behind for anyone. I don't care about that. I'm worried about having money for my life, right? Well, actually, believe it or not, the wealthy and high net worth individuals have been using life insurance for quite some time to save and invest their money for a lot of reasons. I'm going to go through 5 key points why life insurance is a better investment compared to most traditional retirement accounts. So, my first key point. Accessibility. Okay. Most traditional retirement accounts like 401ks, IRAs, anything that's a pre-tax, tax deferred account, here there are actually restrictions on when you're allowed to touch your money. I know most people are like, why should someone be able to tell me when I can touch my own money? But the IRS places these restrictions. So you have something called the 59.5 rule and the 72 rule, which basically it states that you're required to start taking the money out by the age of 72. If you fail to do so, you actually will incur a 50% penalty fee plus state and federal taxes. And on the flip side, you're actually not allowed to start taking your money out until the age of 59.5. And if you do, you'll pay a 10% penalty fee plus state and federal taxes. So with most traditional retirement plans, you just have about a 12, 13-year window when you're allowed to touch your money, right? A lot of people, most people I know don't want to be told when they're allowed to touch your money. So when you compare that to the life insurance, you have accessibility. As soon as your account has equity, as soon as it has cash value, you have access to take that money out at any time. Okay. Second key point is the risk. Okay. So in most traditional retirement plans, like 401ks and IRAs, your money is invested in the stock market, which means that if the market goes up, you could score big, you could have a huge growth of your account. However, you are also susceptible to risk. You're also susceptible to losses. And if you're interested in learning more about this, feel free to check out my other YouTube video on the 3 different ways that your money can grow. Okay, so in a variable account, we could win big, but we could also lose big. And if anybody's actually been tracking the stock market, right now I'm making this video in May 2020, just last month, we had one of the worst recessions we've seen in over a decade, and the market actually dropped 30%. Right? So think about it, if you're in your 50s, you're in your 60s, you're nearing retirement, you were betting on that money for your future, and you just lost 30% of it. Now you're probably gonna have to work another 10 years just to recoup the losses, let alone accumulate any further growth, right? So you have to consider the risk that's associated when investing in the market. In an indexed account, you have the access to the growth. However, you are protected from loss on the downside because your money is actually being invested through the insurance companies, and they are crediting your account the growth of the market, mirroring certain different large indexes. However, you're not actually in the market, so you have guaranteed downside protection. Okay, so who wouldn't want the growth without any of the losses, right? It's a win-win. Have your cake and eat it too. Okay. Next key point is taxes. So most traditional retirement plans are pre-tax dollars, which means that you get money taken out of your gross salary. It's invested into this account. It's growing with interest over the course of 20, 30, 40 years. And then when you go to take the money out in retirement, you pay taxes on your large accumulation, right? So if you were a farmer and you had some seeds that are worth pennies, not that valuable, what would you rather pay taxes on? Would you rather pay taxes on your penny seeds, or would you rather wait 30 years and grow $1 million harvest and pay taxes on that? Most people that I talk to would say, for sure, I'd rather pay taxes on my pennies than on my millions. However, when your retirement is actually invested in a tax deferred account, you're going to be paying taxes on your $1 million crop. Okay. And when we look at the life insurance, these are actually a tax advantaged bucket, which means that you pay taxes upfront one time on your income, and then everything after that you invest, and you get to keep all of the growth tax free. Okay. The next key point is how much money you're allowed to invest. Okay. So with most traditional retirement accounts, you're actually limited as to how much money you're allowed to invest. And some accounts actually limit how much money you're even allowed to earn. With the index universal life insurance policy, the reason why this has become such an attractive, best kept secret of the wealthy is you can literally contribute unlimited amounts of money and have all of that growth be tax free. Who wouldn't want that, right? And finally, this is another kind of cherry on top for the life insurance. It's life insurance, which means that in addition to having all this cash value that's growing inside of your policy for your lifetime, if God forbid something happens to you and you pass away, your beneficiary, your heirs are gifted with a tax-free inheritance in the form of a death benefit. Not only that, many life insurance policies today offer living benefit riders, which means that you could add long-term care, you could add living benefits onto your policy, so that if you should have any kind of chronic illness or critical illness, you have money for that too while you're alive. So I hope you guys see the value in why this is such an amazing option. It's not appropriate for everyone, of course. There's pros and cons to every vehicle. And that's why it's so important to sit with a financial professional and review your current entire financial picture so that they can advise you on if this would be a suitable option for you. So if any of you are interested in sitting down with me so I can help you navigate that, feel free to book a call with me. It's totally free. All you have to do is go to bookleah.com and I'll see how I can help. Hope you guys got a lot of value from this info and have a wonderful rest of your day.